congratulations on an excellent quarter. Everything improved, and indeed you knocked it out of the park for investors. They're very happy with you today. But give us the argument that this is more than one quarter's worth.
Good morning, Vonnie, and thanks for having me. Look, I'd more put it in the context of the full year of 2019. It was our 51st year, and it was our fourth record year in a row as a company. So what we've seen in terms of trends is first, this insatiable appetite for data. And with that, the needs for more and more compute, more and more storage, and the movement of data being faster and faster. Those trends have continued, and we expect them to continue for a long time. Those dynamics and the fact that there's more and more vehicles of compute, not just the PC, not just the server, but at the edge, automobiles and homes and retail shops and factories and hospitals. We see a world where there's more and more demand for compute, and we believe we're well positioned to take advantage of that. And the fourth quarter results were, I think, emblematic of the role we play in driving this compute across multiple different devices. And our outlook for 2020 is for yet another record year. So the macro trends are very favorable. The investments we've been making, we think, were the right investments, and we're seeing the benefit of those in the fourth quarter and as we go into 2020.
Now, you're improving your process node technology. You're going to do that by another 25% this year. But explain to us how you continue to increase margins at a time when margins will almost definitely take a hit from the increased cadence.
Yeah, I think first, the demand for our products, what we've been seeing is a continued desire for the highest performance compute in the products we offer. And what that means is they have a tendency to have highest performances, the highest ASPs. So in the fourth quarter, we saw our Xeon scalable product, a product we called Cascade Lake, had real high demand, and that is the premium product, if you will, for our data center business. With the premium product is higher ASPs, higher margins, and we expect the demand for that product to continue as we come into the new year.
Bob, good morning. Guy in London. You are, though, nearly 3 years behind TSMC when it comes to 7 nanometer. Can you increase the rate of change within Intel in order to close that gap?
Yeah, good morning, Guy, or good afternoon. Yeah, we believe we can. We're launching 10 nanometer now. We did it in the fourth quarter with our client products and our FPGAs, and then we'll continue to launch 10 nanometer products in 2020. At the same time, we've been investing extensively in both 7 nanometer and increasingly 5 nanometer. And our expectations are we will get back to a 2 to 2.5 year cadence of process node advancement. And within each node, we expect to add incremental compute as we've done in the past. So ramping 10, investing in 7 for a quick 2-year follow-on, and continuing to invest in 5 nanometer. And from that gives our design teams the ability with both architecture, packaging, to capitalize on that process technology to deliver what ultimately matters for our customers, which is not what node you're on, but what incremental product performance are you able to deliver.
Okay, I appreciate what you say about that, and I think it's a point well taken in terms of how the market is responding as well. But nevertheless, to come back to Vonnie's point, as you pick up that rate of change, as the delta accelerates a little bit within the business, doesn't that have a margin effect?
Well, I think the outlook that we gave for 2020 relative to last year is our operating margins on slight top-line growth will be somewhat flat. And that's a function of gross margin will come down slightly, but our spending won't grow quite as fast as our revenue growth. So they will offset each other, and our operating margins for the year will be flat with last year.
Well, you actually had
underneath the
targeted
covers a little bit,
60%,
you
Bob.
have
Let me come
really
in on that
strong.
point, because you did target 60%, and while you improved margins last year by more than 2 points to 58.8%, are you now saying that 60% is far off in the distance? When do you actually anticipating hitting 60, if at all, anymore?
Yeah, I think what we said yesterday is our operating margins in 2020 would be flat with 2019.
Right, but my point is
From that,
year...
what it meant was 1 point, implied in that is a 1 point decline in gross margin, offset by a 1 point decline in spending as a percentage of revenue. So we're looking at our operating margins to be relatively flat, despite the fact, to Guy, your point, that we're ramping a new 10 nanometer product. In the early stages of a new product, new node ramp, the tendencies are that will weigh on your gross margins a bit. That is true for us in 2020 as we ramp 10 nanometer, which is very consistent with ramping of new products.
Bob, last April you specifically said you were targeting 60% plus gross margins. When do you anticipate you'll see that now at Intel?
You know, in May, we kind of laid out our multi-year view of our expectations for gross margin over the next 3 to 4 year time frame. And what we indicated was we had expected, as you migrate to 10 nanometer and 7 nanometer over the course of the next 2 years, that would weigh on our gross margins for the business. Since that time, our second half of last year was actually stronger than we expected, and our outlook for 2020 is in line. So that's what we're focused on, delivering 59% gross margins this year as we ramp 10 nanometer and invest in 7 nanometer.
Bob, one final kind of quick, broad question. Do you have any concerns about what is happening in China right now? You've got the coronavirus, that could hit demand. You've also got a trade deal that's just been done that might incentivize the Chinese to rely more on their technology rather than American technology.
Well, first, on the virus, I would just say that our primary focus is on the safety and well-being of our employees. We have a large employee base over there. We're tightly coupled with the WHO to keep pace of what's happening on the ground and making sure that our employees are safe in this circumstance. So that's our first priority right now, and as you know, it's somewhat fluid. Stepping back and just looking at China overall, it's a big market for us. It's been a big market for a while. We are encouraged that the dialogues have resulted in at least phase one of the agreement that implies lower tariffs and fewer products that fall under the tariffs. And we're encouraged that dialogues are happening and hope that they continue. But at the end of the day, like all our markets around the world, the onus is on us to build the best solutions for our customers and staying ahead of the game with innovation. As we focus on that and the things we can control, I think it'll bode well for our business and the products that we build.